Hey guys, welcome back. My name's Aaron. This is Czar Finance, episode 29, Insurance Health, or in other words, health insurance. Now when it comes to health insurance, everybody should need and have health insurance. What it basically stands for, or what it is basically insurance, money that you pay, whether it's annual or on a yearly basis or semi-annual, to an insurance provider for health insurance that will help pay the coverage cost of medical expenses, whether it be medications, doctor visits, or hospitalization, etc. Now, being in the medical service field, as you can see here, for the state of Connecticut as an EMT and working for about 8 years in the service as a volunteer, I can tell you health insurance is very, very important for people to have, because if you don't have it, the premiums could be very high, and it could cost you a lot of money, and could bankrupt you should an accident be really severe and the bills come in that are really high, and you can't pay them. So basically, health insurance is very important to have, like I said. All right. Now, some of the key terms to have in health insurance are what is called a premium. A premium is the amount that you pay to have for coverage. The higher your premium, or the higher amount of pay that you pay for your health insurance, the better coverage cost that you're going to receive. Should something happen, you'll be able to go to the hospital, you'll be able to go to the foot surgeon, you'll be able to go get x-rays, all sorts of stuff, because you're paying a higher premium. Now, just because you're paying a higher premium doesn't necessarily mean you're going to get all the best services, depending on where you are located. Remember, if you travel or you're outside of the country or something like that, some of these plans don't cover those types of things. So you got to look at your booklet and find out whether you are covered on vacation or if your doctor or somebody is not around. Now, another key term to talk about is a deductible. A deductible basically is the amount of money that you pay out of pocket. Generally, the higher the deductible, the lower the premiums. Okay, so it's basically when you go to visit the doctor's office, for example, not the doctor's office, but if you're going to the hospital or something like that, it's the amount that you're going to pay up front, and the higher you pay up front, the less cost it's going to be for you throughout the year to keep yourself insured with health insurance. Okay, so say I pay $200 up front, but my over annual B is going to be less throughout the year because I've already paid the $200 up front. So that's a deductible. Co-insurance is basically an 80-20 split, where you pay 20% of the cost up front, and then the insurance will ride the 80% of the cost later on. The insurance side will cover that. So you pay 20% up front, and the cost or the care up to the deductible amount that you specify, and then the insurance will kick in and take care of the rest of the bill for you. Now, and there's another one called copay. Our co-payments. Have you ever heard of a copay? When you go visit a doctor's bill or a dentist or something like that, you got to pay like $20 or $15 or whatever it may be. That's called a copay, and basically this is a set cap amount that you will pay each time you receive medical services, and it's just to help insure the cost that you still. It gives the insurer or the person that you visited, whether it's the dentist or it's the hospital, maybe not the hospital, but like the smaller facility, dentist, or I guess like doctor's office could be. You could get a copay to make sure that you're current, that you did pay them a service fee for going there, for them to do the paperwork, etc. So that's what copay stands for. Now, there's different types of plans that are out there, and there's a lot of different health insurance plans out there. So you have to do your due diligence when it comes to insurance. Make sure that your job that you're working for has health benefits. Make sure you sign up for them. Make sure it's automatically withdrawn from your paycheck, and so that way you are covered automatically, no matter what. So as soon as you don't have to go pay pay the health insurance, it comes right out of your paycheck right away, automatic withdrawal for your health care insurance, and make sure you're covered. Usually it's 30 to 60 or 90 days before you become covered. So be aware of that. Some states, I think actually there's a national coverage thing that you have to be insured no matter what. So if you don't get insured, you're going to be hit with a fine for not being insured. So nowadays they're making everybody have health insurance. And that's one of the big things that is very important for everybody to have, so everybody can have services and everybody can be healthy in the long run. I had to pause that because we had a call coming in. Anyway, so there's different types of plans that are here. There's the indemnity plan, sometimes referred to as a fee-for-service plan or a pay-as-you-go type of plan. There's the HMO, or Health Maintenance Organizations, or HMOs, basically is a plan where you get to select your doctor, and your doctor selects what type of services you need should something go wrong. So say you have a foot pain or something like that, you go see your doctor first before you go see a specialist. The doctor will recommend, hey, I think you should go see this foot surgeon at this hospital, and then you go see that person. Your doctor is the one who is the gatekeeper of all your medical needs, which is an HMO plan. Okay, so something to think about. The next type of plan is a PPO plan, Preferred Providers Organization plan, which basically the healthcare provider are generally paid on a fee-for-service basis. So you say you break your finger, and you got to go to see that. And let me pause this. Okay, guys, so I'm sorry about that. There was another call that came in that we didn't have to take, but it was almost something called for. But anyway, here we go. So the last thing I was talking to you guys about was the point of service, or POS, actually PPO, which is the Preferred Providers Organization, which healthcare providers in the PPO are generally paid for a fee of service based as the services are needed, much like a traditional doctor's visit. So, for example, say you have a broken wrist or a finger that you need to go see a specialist for, you can go see that specialist or an eye doctor at the hospital. It's not really an emergency, but you can go to a preferred specialist and pay the insurance, and they'll look to see that you have a PPO plan, and that they will deduct it from that as your bill gets charged for that specific amount, for that specific service that they're offering, whether it's an eye doctor, a bone specialist, a foot specialist, I don't know, something of that nature, but they're very specific as to what their services are being offered. The last type of service is a point of service, or POS. It's a mix of all three hybrid plans, which whichever one suits your needs, you can use that to cover that. And again, my name's Aaron. This is Czar Finance, and I hope you guys learned a little bit about health insurance. Look into it, make sure your company has this type of thing, and explore around and make sure that you check out the different types of services that are covered, whether you're traveling in or outside of the country, or you're on vacation somewhere around the area, that you still are covered. Because if you're not, things could turn up awry when you have to pay the doctor's bill in a different state and things aren't covered in certain areas. So please check out your health insurance coverage, see what you have, and be safe. All right, take care. Bye-bye.